So yesterday saw the release of the UK house price index for the period up to February 2024. And the positive news is that it shows an increase in house prices of 0.4% from January to February, which shows just how resilient the UK housing market is. Let's take a look at the report in just a little bit more detail. So as you can see, headline statistics for February 2024, the average price of a property in the UK is now £281,000. From a year ago, prices are down 0.2%. So that's actually not that bad when you take things into context and you look at the turmoil that we've seen over the last year or so, especially with increases in interest rates. And month on month, like I said, a 0.4% increase. So let's take a look at the economic statement. So the average UK house price annual inflation was negative 0.2% in the 12 months to February 2024, compared with a negative 1.3% in the 12 months to January 2024. So a big improvement there. And the average UK house price in February was £281,000, unchanged from 12 months ago. Scrolling down a little bit, we can see the Royal Institution of Chartered Surveyors reported an increase in buyer demand for the second successive month. When disaggregated, most parts of the UK have seen a recovery in buyer enquiries over the past 2 months. RICS also reported the largest increase for new instructions since October 2020, standing in stark contrast to the negative readings throughout 2023. And this is something that we're actually seeing on the ground now. We're getting inundated with new mortgage inquiries, which is good news. And it shows the strength of positive sentiment that is out there with buyers. The Bank of England summary of business conditions reported a gradual improvement in the market over the month, which is likely driven by the continued easing in mortgage interest rates. Now, that's an interesting point because that actually isn't really the reality. Over the last couple of weeks, there's been a lot of talk about when the Bank of England might actually make that first reduction in the base rate. And that date keeps getting pushed back because there are so many economic headwinds and we've still got sticky inflation. We're also hearing reports from the Federal Reserve in America that inflation is back over there. So they may not be easing interest rates as quickly as they thought. Obviously, we are a completely different economy to America. And I think for once, we're probably not going to follow what the Federal Reserve do. We're actually going to stand on our own 2 feet. It's likely that European Central Bank are going to be cutting interest rates maybe June time. And I think the UK will probably follow soon after that. Maybe not in June, maybe in August, maybe in September. We'll wait and see. But over the last few weeks, because of all these economic headwinds, mortgage lenders' interest rates have actually been going up slightly. But it doesn't seem to be having an effect on the number of enquiries that are receiving it, which is great news. And it shows that people are actually now starting to handle the affordability whilst getting used to the new higher interest rate environment that we find ourselves in. So HMRC's UK property transaction statistics showed that in February 2024, on a seasonally adjusted basis, the estimated number of transactions of residential properties with a value of 40,000 or greater was 83,000. This is 5.6% lower than 12 months ago, but between January 2024 and February 2024, the UK transactions increased by 1.2% on a seasonally adjusted basis. And the Bank of England's Money and Credit Report for February 24, that report that mortgage approvals, an indicator of future borrowing, increased to 60,400 in February from 56,100 in January. Like I said, we are starting to see more inquiries. Now, if you're watching this on YouTube, there will be a link to this report in the notes section, so please do go take a look at that because you can have a look at the report yourself. I also want to take a very quick look at this other article that was in an industry magazine as well, Property Industry Eye. And as you can see, it says the property market is bouncing back. What can we expect over the rest of 2024? So the sales market is bouncing back with new sales agreed running 8% ahead of last year. We believe that the market is on track for a 10% uplift in sales volumes versus 2023, but it does say it's still tough going in some places, but overall the sales market feels more balanced than it has for quite some time. We're currently in the middle ground where buyers and sellers are more aligned on pricing and willing to commit to deals with pre-pandemic levels of sales inventory. However, higher mortgage rates and cost of living pressures are impacting the ability of households on lower incomes and with smaller deposits to access the housing market. Talks about the greater resilience on price from sellers. So after a big slowdown in house price inflation last year, prices are stabilizing at levels where more deals are being agreed. Sellers are becoming more realistic on price, but the natural instinct is to push the price to offset the need for a larger mortgage and to help fund stamp duty and other costs. It does say that house prices aren't going to take off in 2024. All the UK house price indices are starting to align around the plus or minus 1% range for the year. The lender mortgage-based indices, so that's like the Halifax and the Nationwide house price indexes, recorded much bigger price falls than other price indices that included cash buyers like Zoopla and ONS. That's because the Halifax and the Nationwide indexes are only for their own mortgage customers. It doesn't take into account all the other mortgage lenders and people that are buying with cash across the rest of the marketplace. We don't expect house price inflation to take off as there is much more supply, which is true. And it says that the average agent on Zoopla Zoopla has 30 homes for sale, the highest level since before the pandemic, boosting choice for buyers. And at the same time, higher mortgage rates have also dented buying power. So obviously, when you've got a greater supply, it does keep prices level. And as I just said, talking about the affordability, we are now starting to see the realism come back to the market where people are buying within their affordability range rather than overextending themselves because the interest rates are actually now much higher than they were previously. And then the key thing to take from this article is don't expect big falls in mortgage rates, which I've kind of just touched on when we looked at the previous article. And I mentioned the fact that rates have been increasing. Falling mortgage rates over recent months have boosted market confidence and supported more sales. There is ongoing speculation over interest rate cuts later this year and how much this may boost demand for homes and prices. The reality is that city expectations for future interest rate cuts are already baked into fixed rate mortgage deals. Interest rates would have to fall further and faster for mortgage rates to fall below where they are quickly. 4 to 5% mortgage rates are manageable for the housing market, although the closer they are to 4%, the better for volumes and pricing. And this is what I was saying a minute ago. We're starting to see people get used to the fact that 4-5% is the average interest rate, and in reality is still low when you look at historic terms. Yes, it's much higher than it has been over the last 10 to 15 years where we've seen rates below 1%. But that's not the norm. That was unrealistic and that was never going to continue forever. So 4 to 5% is the new norm, something that we're going to have to get used to. So if you are looking to purchase and you have been through the affordability calculations with a broker, then there's nothing to stop you from buying. Just make sure that the property you're looking at is priced realistically and don't go over your budget. Stick within your budget so that the mortgage remains affordable. But generally speaking, house prices in the UK are very, very resilient when you do take into consideration the fact that we have been through a lot of turmoil over the last 12 months or so. Interest rates rising, inflation at much higher rates, cost of living crisis, and people struggling to pay their bills. For house prices to only drop year on year by 0.2% just shows just how resilient the UK housing market is. There will also be a link to this second report in the YouTube notes. So again, please do go take a look at it. And if you don't yet follow us on Instagram, please do go take a look for us on there because we produce much more content on a daily basis, providing you with updates on when lenders change their mortgage rates and things like that. But as always, thanks for watching. Thanks for your interest in the channel. It's greatly appreciated. Any thoughts, any comments, please do leave them below. Take care.